Hi everyone and a warm welcome to our next revision lecture. We are starting with our chapter number 5, that is time of supply. As you know, this revision series is happening in complete 100% English. So a separate playlist has been created. Chapter number 1 to 4 have already been uploaded. This is chapter number 5. Time of supply is not a very lengthy chapter. It's fairly concise, fairly small, only 3 pages in our new notes. So it will take approximately 30 minutes. Okay. So ensure you watch this video obviously in one shot. Okay, now let's start with time of supply. Now please understand what is the context of time of supply. First of all, the chapters, the sections that we are studying are from CGST Act, not IGST Act. Time of supply basically determines the liability date. Like for example, whichever the time of supply date will be, accordingly in that month's return I have to pay GST, right? One question is whether GST will be leviable or not. For that we have covered various types of chapters like supply, exemption. But now that we know that GST will be levied, we need to know when do I have to pay that to the government. For that, time of supply comes to our rescue and talks about the dates during which I have to pay my GST. Okay, basically during those return dates. Okay, let's start. Chapter number 5 will be linked to section number 31. There will be some reference of section 31, that is your time limit and issue of tax invoices. I will cover that side by side, so please don't worry. Let's start first with section number 12. Basically 3 sections we need to cover: section number 12, section number 13 and section number 14. Section 12 is with respect to goods, section 13 is with respect to services, and section 14 talks about change of rates in tax. Okay, let's see. Section number 12, time of supply of goods. Applicability: the liability to pay tax on goods shall arise as per the time of supply which is determined under this section. That is okay. Now, whenever we talk about time of supply, we have to consider 2 situations. One is your forward charge mechanism in which the supplier will pay GST. One is your reverse charge mechanism in which recipient will pay GST. Let's start. Time of supply in case of forward charge mechanism. Time of supply shall be the earlier of 2 dates. Date number 1, the date of issue of invoice by the supplier, or the last date on which he is required to issue the invoice with respect to that supplier. So if he issues the invoice within time as per section number 31, then that date will be taken. If he does not issue the invoice within time, then we have to take the last date till which the invoice should have been issued. So for example, the last date happens to be 1st of June. Then if it is issued before June, we will take that date. If it is not issued within 1st June, then 1st June will be the date taken. Okay. B. So date number 1, we have to compare this with B number date. The date on which the supplier receives the payment with respect to the supplier. Now, please hold on. Before trying to understand this, note that this particular clause is practically redundant today except in 2 cases. Now, first let's try to understand what this clause number B says. This says basically that GST is payable on advance payment as well. Now read it again. The date on which the supplier receives the payment with respect to supply, receives the payment. So one is basically your invoice date, second is your payment date. So if for example, supplier of goods receives some kind of advance, he has to pay GST on it. But through notification number 66 2017, I would advise you to learn this notification. This particular clause number B is not applicable today with respect to goods except in 2 cases. Point number 1, if he is a composition supplier. Point number 2, in case of online money gaming, this online money gaming is also considered as goods. So in these 2 cases, this particular clause applies. That is, if any advance payment is received, then you have to pay GST. Otherwise, it is practically redundant because of notification number 66 2017. Final conclusion, you have to pay as per invoice date. Now, let's try to understand what is this due date, that is as per section number 31, by which invoice should be issued. Let's talk about that. Wait a minute. Section number 12(2), that is your basic applicability. It is linked with section number 31, tax invoice. So let's try to understand that. Section number 31 says basically when do you have to issue the tax invoice. So it is to be issued before or at the time of removal of goods if movement is involved. If the movement is not involved, then delivery of goods or making goods available to the recipient. So if let's say the recipient has to come and pick the goods himself from the factory of the supplier, then this case will apply. Otherwise, removal of goods. So before removal of the goods, so maximum till the removal, he has to issue the invoice. If this date is complied, then you have to take the invoice issue date. If this date is not complied, then for time of supply, you have to see the last date up to which invoice should have been issued. Okay, what do you mean by continuous supply of goods? For basic understanding, just have a brief understanding of this term, continuous supply of goods. It is basically happening under a contract on a recurring basis. So in that case, invoice needs to be issued before or at the time of issuance of the periodical statement If there is no such concept, there is no such involvement of periodical statement, then receipt of periodical payment. Okay. Okay. There is a special case when goods are sent on sale or approval basis. For example, I send you 5 suits for approval. Okay, let's say there is some requirement for you to buy a suit. I send you 5 suits. I say that pick whatever you want, pick one, whatever you want, whichever you like, and you send back the 4. So basically this is a sale or approval basis, right? So when you will approve, when you will consider as final, so for that supply will take place, balance 4 will be returned back. Okay, so I have to issue the invoice with respect to that one suit that you like, right? Now law says that you have to select this particular whatever you are selecting within 6 months. If within 6 months the goods are not supplied, that is you do not select the goods nor they come back to me, so it will be a case of deemed supply. I have to issue the invoice with respect to all the 5 suits, right? So 6 months is the time limit you have to take care of. Okay, now let's proceed ahead. Just a minute. This you know now, what is the what is the time limit within which the invoice needs to be issued under section number 31. This date is clear. Okay, now let's move ahead. Proviso with respect to section number 12 subsection 2. With respect to up to 1000 rupees received in excess, supplier can consider time of supply to be the invoice issue date. Now since GST is not applicable on advance payment, this proviso is also practically redundant. Why? Because supplier doesn't have to pay GST on the advance. So why there is a need to take the advance amount related time of supply as the invoice date? There is no need, right? Because now regardless if it is received 1000 or 1 crore or whatever the amount is, anything is received in excess, the time of supply will be as per invoice date only, right? So this proviso is also redundant. Okay, explanation. Supply shall be deemed to have been made to the extent it is covered by the invoice. It simply says that if I am issuing invoice with respect to 50 kgs of goods, then we are talking about time of supply of 50 kg of goods. Contract may be of, let's say, 100 kilos of goods, right? This is not very important. Now, section number 12 subsection 3. Time of supply in case of RCM. RCM means recipient is going to pay GST. Here we have to compare 3 dates. Date number 1, date of receipt of goods, physical receipt of goods. Date number 2, earlier of 2 dates. So this earlier of 2 dates will be one of the dates that will be compared among 3. Mark this point, I am repeating. In date number 2, we have to internally compare 2 dates. Okay, this is basically with respect to your payment date. Now what is the payment date? The date of payment as entered in the books of accounts of recipient, that is in my books of accounts, I will show my payment entry that needs to be compared with the date on which the payment is actually debited from my bank account, right? Amongst this, whichever is earlier will be my date number 2 and date number 3 will be 31st day from the date of issue of invoice that the supplier gave. Now practically he may give me invoice or some other document also in lieu of this particular supply, right? So 3 dates. Date number 1, physical receipt of goods. Date number 2, earlier of 2 dates. Internally date number 1, the date on which I am showing my entry in my books of accounts, and second is my date of debit in my bank statement, and date number 3 is 31st day. Sir, how did you say 31st day? Legal words are date immediately following 30 days, meaning which 31st day from the date of issue of the document by that particular supplier. Whichever is earliest will be the time of supply. For this, I will cover one small simple example that will ensure everything is clear. B Limited sells goods to C Limited on 4th June. Sale date is important. Answer is no. This is not relevant. We have to compare 3 dates. The goods are taxable under RCM. Invoice is issued on 4th June. Okay. From that, we have to see 31st day. 31st day will be 30 minus 4 minus 30. So July, it will be 5th July. 30th will cover, 30th will be till 4th July. So 31st will be 5th July. Please don't mess up this 31st day calculation. I am hoping that at CFNL level, you are not going to commit these mistakes. C Limited records the payment on 21st July and debit on 31st. Internally, we have to select 21st July. Okay. So I wrote this in second. That's okay. That doesn't matter actually. 21st July. This is the payment date, and third is the receipt date. Receipt date. Okay. This is the received the goods on 6th of July. So which is the earliest? Earliest one is 5th of July. So time of supply will be 5th July. Okay. I hope this is clear. I have covered one example as well. If it is not possible to determine time of supply under any of the above clauses as per these 3 dates, if one of the dates is not available, we are not able to do it, then time of supply shall be the date of entry in the books of recipient, entry with respect to the supply. Generally, this is not very testable, but you should be knowing it. Okay. Time of supply in case of supply of vouchers by the supplier. So what are vouchers? Vouchers are basically a part of the consideration only. Okay, so for example, there is a Sodexo coupon, or let's say there is a Shoppers Stop coupon voucher, which enables you to shop for, let's say, rupees 5,000. Now, what is the time of supply with respect to vouchers? We have to ask one critical question. The question is that is the supply identifiable? For example, Shoppers Stop voucher says that you can buy anything for 5,000. Here, supply is not identifiable. For determining time of supply, we need to wait for the coupon or the voucher to be redeemed. Then only we will know what kind of supply it is redeemed against. Let's say I buy 2,000 worth of shoes and let's say 3,000 worth of some perfume. GST rates are different, so time of supply will be depending upon the date of redemption, because then we will know what kind of supply it is redeemed against. But if let's say this voucher is specifically for jeans, then we know that the supply is identifiable, jeans will be redeemed. In that case, time of supply will be the date of issue of voucher. I hope I have made myself absolutely clear. I am repeating. If supply is identifiable at the point, so we know what exact item it will be redeemed against, we will take the date of issue of voucher as the time of supply, because now GST is to be paid as per the calculated rate since we know the item. Okay. In other cases, date of redemption of voucher, because then we will know what it is redeemed against. Residual cases, this is not very testable, but you should be knowing when it is not possible to determine time of supply under any of the above subsection. So this is not FCM, this is not RCM, this is not a voucher case, but that case involves some kind of a periodical return to be filed. The time of supply shall be the due date of return. In other cases, it will be the date on which tax is paid. This will involve the cases like in case of some kind of proceeding is taking place by the government, audit has taken place, something has taken place, and I am paying the tax accordingly. So that time of supply will be the date on which I am actually paying the tax. Okay. Now, time of supply with respect to interest, late fee, penalty. Please understand this very, very carefully. Supplier has given some amount, given some kind of a supply to the recipient. Recipient is going to pay some amount. For that, we will apply section number 12, subsection 2, 3, 4, voucher, whatever it is. But sir, with respect to items such as interest, late fee, penalty, we don't know these kind of amounts beforehand whether they are going to be charged or not. For example, interest is applicable if let's say recipient does not pay in 30 days. Late fee is applicable, penalty is applicable if let's say some default happens in next 40 days. So how will supplier know whether this amount is actually going to be received or not? Hence, law also understands this. Hence, time of supply in such cases will be the date on which these items, these amounts are actually received, because then we come to know that okay, these have accrued and now time of supply will be there. Okay, so time of supply shall be the date on which supplier receives such addition in value. This is an important keyword. These are additions in value. These are not determinate. Supplier doesn't know beforehand whether he is going to receive that or not, whether recipient is going to commit any default or not. Hence, we cannot decide this beforehand, right? Okay. Now let's come to section number 13, time of supply of services. Section number 12 is done. Applicability, this is normal. Basically, we are talking about time of supply as to when do we need to pay GST. Again, just like 12.2 was FCM, here also time of supply in case of forward charge mechanism. Here again, you start with one critical question. What is that one critical question you need to ask and check in the question paper? That sir, did the supplier issue invoice within time? Now we have to again understand and link section number 31 to understand what are the time limits within which invoice in case of supply of service needs to be issued. Okay, so please understand that is 30 days is the normal time limit. But I will just show you quickly. See, with respect to services, time limit is either issue before the provision of service or within 30 days from the provision of supply of service. So in services, 30 days time limit is given. Okay, specifically with respect to this is okay. This doesn't need to be done right now. Okay, one point for banking, insurance and financial companies, instead of 30 days, you have to consider this as 45 days. In case of continuous supply of services is basically again a recurring basis under a contract, and it is generally more than 3 months. Not generally, it is more than 3 months. This 3 months time limit is not given in continuous supply of goods definition. Okay, so here you have to issue the tax invoice. Please don't get confused when I'm covering this part, that is section number 31. Here we are talking about tax invoice. This tax invoice date is linked to time of supply under section number 12 and section number 30. Tax invoice date is section number 31, right? Okay. Here the tax invoice date is on or before the due date of payment if it is ascertainable from contract. If from contract there is no due date for payment, then we have to see actual date the payment is received. If some payment is linked to event completion, then the tax invoice needs to be issued on or before the date of completion. For example, there is a building being constructed. On every slab that is being laid, 10% is to be given, and there are 10 slabs. So every time the slab is laid down, the tax invoice should be issued for 10% of the amount. If there is a cessation of supply before completion, then during that cessation, at the point of cessation, whatever work is done, you issue tax invoice with respect to that particular amount. To be honest, for time of supply analysis, only this is relevant, 30 and 45 days time limit. Okay, now let's start section number 13, subsection 2. So as I said, to determine time of supply in case of forward charge mechanism services, you have to ask a critical question, whether invoice was issued within time limit or not. Time limit 30 and 45 days. 45 days in case of banking and financial industry. If invoice is issued within time limit prescribed under 31, that is 30 or 45 days, then you have to compare two dates. One, the date of issue of invoice. If issued within time, that we already know it has been issued, so you can actually not, you can cut this point. So if you comply with the time limit, then we have to see the date of invoice and the date of receipt of payment, whichever is earlier. If the invoice is not issued within time, 30 days have gone by, you did not issue invoice, so obviously now we have to compare the supply date. The date of provision of service will be compared with the date of receipt of payment, whichever is earlier. If above provisions do not apply, time of supply shall be the date on which recipient shows the receipt of supply of the receipt of services in his books. This is kind of a residual clause that we covered in goods also. So I am repeating, time of supply in case of services, forward charge mechanism, subsection 2, section number 13. If invoice is issued within time period prescribed under 31, that is 30 or 45 days from the supply of service, then we have to compare two dates, date of issue of invoice because it was issued within time, and date of receipt of payment, whichever is earlier. If invoice is not issued within time limit, we have to compare the provision of service date, that is when the service was given, with the date of receipt of payment, whichever is earlier. I hope this is clear. Now here this proviso will be absolutely applicable. Why? Okay, another thing you have to understand, in case of goods, we talked about the notification number 66/2017, which basically said that GST doesn't need to be paid on the advance payment in case of goods. That is applicable only in case of goods, not services. So for services, this is still very much applicable, that we studied that GST is payable on advance of services, right? Now, this provision, what does it say? Here this proviso will be applicable and will be relevant with respect to amount up to rupees 1000 received more than the amount in invoice. Time of supply with respect to excess at the option of supplier can be taken as the date of invoice with respect to excess amount. Let's try to understand this particular proviso that is still relevant in case of services, not goods. See, let's say my invoice amount happened to be rupees 100, and let's say I received the payment of 200. Okay, now let's take 150. What is the excess? Excess is 50. Now let's try to understand what is the time of supply. We clearly said that time of supply will be the earlier of the invoice related date if issued within time, or the receipt of payment. So excess 50 you have obviously received before the invoice. Why? Because invoice was of rupees 100 and payment was rupees 150. So 50 rupees has been received in excess, and GST is payable on advance payment. 50 is my advance payment. 50 is my advance payment. So practically this will be difficult in case of utility bills. What are utility bills? Gas bills, electricity bills, phone bills. In that you will generally observe that in utility bills generally 200, 100, 300 rupees is paid in extra, that is adjusted during next billing cycle. So to provide relief to those particular companies, proviso came and say that up to rupees 1000 excess. Normally the law says that you have to pay GST on this because GST is payable on advance. With respect to this 1000, invoice has not been issued, so GST would be leviable. But now with the proviso we are giving you an exemption. We are giving you not exemption, a relaxation, that up to rupees 1000 at the option of the supplier, he can treat this particular time of supply during the issue of invoice with respect to this excess. So let's say 100 is received in extra in some utility bill. The payer pays 100 rupees extra. that is covered in the next billing cycle and next invoice. So the billing company, the utility company, gas company can pay GST on that excess during the next cycle. I hope you're able to match these points properly, because logic learning is very, very important. Okay, so this is important and covered. Explanation. Supply shall be deemed to have been made to the extent covered by the invoice or payment, as the case may be. This is also very, very normal. This example you can cut. This was with respect to goods, not services. Let's take a simple example. There was a carpenter who did some work with respect to 2 tables. So invoice and payment is with respect to 2 tables, then time of supply is also with respect to 2 tables. The contract may be for 10 tables, does not matter, right? So this is also very, very procedural. Now, what do you mean by this word, date of receipt of payment? This means earlier of the payment entered in the books or payment is credited to the bank account. So I am the supplier. For me, what is the date of receipt of payment? The date on which I record that entry in my books, or the date on which the payment is actually credited in my bank account, whichever is earlier, right? Okay, now subsection 3, 12.3 talked about RCM goods, 13.3 talks about RCM services. We compared 3 dates in case of RCM of goods. One amongst the 3 was the date of receipt of actual goods. That is not obviously applicable in case of services, because services is not something which is physically received, so that is removed. Other 2 are almost same. Let's see. In case of RCM, when will the liability to pay tax arise for the recipient? Date 1, earlier of the date of payment entered in the books of accounts of recipient. Sir, why are now you talking about recipient, not supplier? This is RCM that we are talking about. This one was for FCM basis. FCM basis means supplier is going to pay. That's why we talk from the supplier point of view, that whenever he receives, shows the entry or credited. Now we are talking about RCM. So recipient is going to pay. So the date the payment is entered in the books, or the actual date on which the payment is debited. Don't try to mug up things unnecessarily. This is quite logical. Then that in RCM we are talking about recipient. So recipient is going to pay. Pay means the date it is recorded in his books, or the amount is actually debited from his bank account. So earlier of these 2 will be date number 1, and date number 2 will be 61st day. RCM goods, it was 31st day. Here it is 61st day from the date of issue of the invoice or other document issued by the supplier. Earlier of both dates will be covered. Another date that we used to cover in case of goods was the actual date of receipt of goods. That is obviously not applicable in case of services, being intangible in nature. Okay. If not possible to determine time of supply as per above dates, we will take the time of supply as the date of entry in the books of recipient, just like we talked about in goods. In case of supply by associated enterprises, this is a new point. This is an important point. First, understand what is associated enterprises. This you already know. In your income tax act section number 92A that you cover in transfer pricing, we are talking about the same associated enterprise, right? So associated enterprises are obviously involved with one another. They know each other. There is some kind of a connection. So in that case, the law is not giving them the benefit of 60 days in this particular case. In associated enterprises also RCM is going to apply, but now here we will compare the earlier of date of entry in the books of accounts of recipient and the actual date of payment. Basically, we are excluding this 60 days benefit and comparing only these 2. Okay, so whenever you see associated enterprises and supplier is located outside India, the time of supply will be earlier of 2 days. Plain, simple, nothing more to be analyzed, right? Supplier is outside India, please mark this point. Recipient is in India, because if both are in India, then obviously transfer pricing and the terms with respect to associated enterprise won't be applicable. Okay, now 13.4, 13.5 and 13.6 are exactly like goods. In case of vouchers, see whether the redeemability means the goods or services, basically in this case services against which it is to be redeemed is known or not. Residual cases, due date of periodical return or date of tax payment, and value additions, we have to see the time of supply as the date of receipt of the addition in value. Now section number 14, change in rate of tax. This is very, very important. Please understand the time flow that we have to cover. Then I will cover one small cheat sheet. Cheat sheet basically will help you clarify the entire concept. Now, what is happening in change of rate in tax? See, let's say there was some kind of supply of service being taking place. Let's say hotel service. Okay, so person came on let's take a simple example, on 5th of January and stayed for 2 days, 5th and 6th, and he was checking out on 6th of January. he paid an amount on 6th Jan by a check which was actually credited in the bank account on 9th of January, and meanwhile on 8th of January, let's say the tax rate was changed, or exempt supply became taxable, or taxable became exempt. So basically there was some change in rate in tax. Some events were taking place before, some events were taking place after. What do you mean by events? The supply event, the invoice event, the payment event. So now there is a confusion as to we will apply pre-change regime or post-change regime. For example, it was earlier exempt but now taxable. So in this supply of service, whether it will be exempt or taxable, that is the entire point that is being covered by section number 14. Okay, now I am giving you the flow of how you need to solve these questions. It's very, very simple and easy. Let's start. Identify 4 dates: invoice date, payment date, supply of goods services date, and change in rate, because this is our main anchor point according to which we have to classify. Check where 2 of the 3 dates, which are the 3 dates I am talking about? These 1, 2 and 3, invoice, payment and supply fall. If any 2 of the 3 dates fall below the date of rate change, then pre-change rate will apply, or whatever the pre-change regime was, taxable, exempt, whatever it is, it will apply. If 2 out of 3 fall after the change date, then post-change rate will apply. As simple as that. We will cover the cheat sheet. Please wait for that. Okay, now next question. We know by this particular part, we know whether pre or post will apply. But now what is the exact time of supply? Pre or post is okay, but we have to give a date, right? We have to understand one specific date as the time of supply. So what will be the time of supply? Let's see. The date of supply of goods and services will never be the answer of time of supply. Time of supply answer will either be your invoice date or payment date. The date of supply will never be the answer. If invoice date or payment date fall before or after along with the supply date, that date will be the time of supply. If both fall together, earlier of them will be the time of supply. Now please, I know you haven't understood much. We have to cover this particular cheat sheet first, then we will cover this particular box. Let's see. I'm repeating the process once. You see where 2 of the 3 dates apply. 3 dates: invoice date, payment date, supply date. If 2 out of these 3 events fall before the change date, then pre will apply, otherwise post will apply. So see where 2 of the 3 apply, where 2 of the 3 fall. After that, this will never be the answer of time of supply. This will be the answer. If both are falling before or after, earlier of that, now that we will cover through cheat sheet. Just wait a minute. I will cover this point again. Case number 1. If supply was done before or after means compared before of what? The date of change of the tax. So exempt, taxable, exempt, 12 to 5%, whatever it is. If supply was done before, invoice was done before, and payment was done after. So now see, out of these 3, you have to see where 2 of the 3 fall. Obviously 2 of the 3 will fall somewhere, right? If all 3 are before, then also there is no confusion, but we have to see 2 out of 3. Supply and invoice before. So 2 fall before, hence the answer will be before. But now out of before, what will be the time of supply? I just now told you that supply date will never be the answer. So invoice date will be the time of supply. Let's do some more examples. Supply was before, invoice was after, and payment was before. So again, 2 before means answer will be before. Basically pre-change regime will apply. But what will be the time of supply? Date. What is the exact date? Supply is never the answer. So payment date. Sir, why not invoice date? Because it is after, and answer is before. Now this is important. Let's understand this. If this is clear, your entire concept will be done. Supply before, invoice after, payment after. 2 or after, 1 is before. So obviously post change regime shall apply. But now after, with respect to after, there is one invoice date and payment date. Which should be the time of supply? Earlier of both. Earlier of both. Similarly, now I have taken this in after context. After, before. So after will be the answer, and supply is never the time of supply date. So invoice date will be the time of supply date. After, before, after, you have to see after, because 2 out of 3 fall after, and supply date is never the answer. So payment date. Now here again, this is important. After, before. After, before, 2 fall before, hence answer will be before. Now these both can be answer dates for time of supply. So you have to see earlier of invoice date and payment date. Now you can read this. It will be much clearer. Let's read again. This part is clear. This part, 2 out of 3 concept. This will help you to understand whether pre-tax will apply, pre-change will apply, or post-change will apply. But now the essential question is, okay, pre or post we know, but what is the exact time of supply date? Date of supply will never be the answer of time of supply. The supply dates will never be the answer of time of supply. If invoice date or payment date, one of which falls below or after along with the supply, then that date will be the time of supply. If both fall together, then we have to see earlier, like in these cases. Here both were after, here both were before. So we saw earlier of 2 dates, right? Now this is small point which I will cover with small flowchart. See, in general, what do you mean by payment date? Payment date for supplier, normal FCM basis I'm talking. It means the date on which I put the entry in my books, or the actual credit, whichever is earlier. I hope you know that. Now, suppose a person tries to act smart. Suppose a supplier tries to act smart. What do you mean by tries to act smart? He knows that there is a rate change coming, and he wants, because payment date is one of the events that helps you to understand and figure out whether pre or post change will apply. He puts this entry in books quite earlier, and actual credit is quite later. Now this quite later means if this is after 4 working days of change of rate, after 4 working days of change of rate. Now normally the law says we have to pick the earlier one, and this is the earlier one, but if this is the condition which is complied, then credit date will be the payment date, not the entry in books. Let's take as a small example. Now let's say this is 15th of June, 16, 17, 18, 19, 20, 21, and this was, let's say, 22 June. On this date, actual credit was done in bank, and entry books was, let's say, 12th June. Normally, this is my date on which the rate was changed. Okay. Normally, in normal circumstances, what do you take as the date of payment receipt? Earlier of entry and credit, whichever is earlier. So 12th June would have been answer. But in this case, the credit has been received after 4 working days. So in this case, we have to ignore the entry date. We have to pick the credit date. This person is trying to act smart. He's putting the entry date quite earlier in books to try to make this fall below. Maybe the pre-change regime would have been beneficial for him. This was the last point with respect to this chapter. Entire chapter is complete in 30 minutes. I hope this was absolutely useful. Solve the questions. Everything will be absolutely clear. All the very best, and we'll meet in our next revision lecture. Ensure you're sharing these lectures with your known friends and other students so that it is beneficial for all of them, right? So all the very best. Study well. Take care. Be safe. Bye-bye.